You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Nasdaq. From its inception, Nasdaq has been an innovator and agent of change in the financial markets. It's in our DNA, from the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges. We exemplify customer focus, consistent technology, and streamlined solutions. Now Nasdaq is proud to launch the Nasdaq 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VOLQ uses only at-the-money options to provide a precise measure of Nasdaq 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. Nasdaq, leading the U.S. options market and continually rewriting tomorrow. And now, get ready to hit the Option Block.
All right, everybody. That rockin' tune means it is time to kick off our broadcast week here on the Options Insider Radio Network. What better way to do that than with the first of our bi-weekly episodes of the Option Block. My name is Mark Longo. I'll be your host, your guide throughout this week-long journey into the world of options. Make sure you join us every day here on the network if you aren't doing so already. Something hitting you pretty much every day. We got a couple of shows today. Got Interview Tuesday. Tomorrow we got Education Wednesday. Got Second Dose of OB on Thursday, as well as TWIFO Vol Views on Friday, and a bunch of other stuff snuck in there throughout the week, like the Advisor's Option and everything else. So stay tuned, stay glued to your podcast feed, or indeed to the Mixler live stream if you can join us live. You can get it in your ear holes instantly. And make sure, if you like what you hear, keep those reviews coming on your platform of choice. We're seeing new people discovering us all the time. All those Robinhood and Webull people and everybody else who are discovering options need a place to go. So point them in our direction. Head on over to your platform of choice. Leave those reviews so new folks can continue to discover the network. And, of course, keep those questions coming, too. We do love to hear from you guys. And, you know, it's our first show of the week. We like to kick it off in style. So let's do that. I know you guys like to stump our co-host here as well, as we've been getting a lot of great submissions for this segment as well. You guys certainly seem to like it. We went to the apex of the 80s last week. Yes, we did Miami Vice last week. It's hard to get more 80s than that show. The clothes, the music, the cars. It just personified everything 80s, both good and bad. Today's show is up there as well. I'm not sure if anything can really match Miami Vice in terms of ultimate 80s-ness, but if maybe it's one notch below it, but just barely. This is another iconic one. So here we go. Also chosen for the Rock Lobster, but he's not here today, so he's going to be mad when he hears this one. Here we go. As our 80s music guessing game continues. All right. There we go. Glad to see it finally got rolling out. There's a pretty iconic one, and this was chosen specifically for the Rock Lobster because he's been doing so dismally at this game. And he admitted the only show he ever watched, really, was this one. And nay, he didn't make it today. Not gonna be able to have his one chance at getting points. Instead, let's go out to the Nasdaq Volatility hot seat out there today, where we are joined once again by our old friend, Mr. Russell Rhoads from Loyola University by way of EQ Derivatives, by way of a bookstore near you. New volatility book hitting the shelves forthcoming. Mr. Rhoads, A, welcome to the option block. It's been some time since you've been on this program. And then B, can you guess what show that is, sir?
Was that Magnum PI?
That was well done, yes. That's kind of an easy one, but it was done on purpose. So again, it was supposed to give the Rock Lobster a point.
Andrew a chance.
Yeah, and because he's been pretty, shall we say, terrible at this.
Well, just one quick question. Does this mean that there's finally a game on your network that I'm not in last place on?
Yeah, well, you're certainly up there with our other guests, because we had Matt on last week, and we gave him an easy one, Miami Vice, and he guessed instead Sharp Dressed Man, the ZZ Top music video, because he was in it. Which actually was kind of fun. We did manage, check our Twitter, listeners, we did manage to find a screen grab of Matt from ORATS dancing in the background of Sharp Dressed Man. It's worth a look. Go on over there at Options and scroll through our tweets if you can find it. Let's also go out. I know he knew this one because he chimed in on the chat the second it was going. He's been pretty hot and heavy on this game. He's pretty much almost undefeated on this. He is Uncle Mike TOSAW from St. Charles Wealth Management, a.k.a. the guy who knows a thing or two about 80s TV themes. Mr. Uncle Mike, welcome back to the program. Did you know that one, sir?
Yeah, that one wasn't even hard. That one was, I'll admit there was a couple of them that I wasn't asked over the course of the last month or two that I would have gotten wrong, although I'll still ride my Airwolf coattails. But
you got Airwolf in your back
really
pocket
easy
for a long time, sir. That was a good one.
That was. But, that one was really too easy, I thought. So, anyway, let's bring back some challenging ones next week.
I think that was the plan, trying to give the Rock Lobster a point, and he missed it. So instead, we have the greasiest of meatballs by way of the tastiest of Texas chilies / perhaps the most barbecued of briskets, Mr. Mark Sebastian from OptionPit.com, by way of Carmen Lion Capital, by way of down deep in the heart of Texas, Mr. Meatball. A, welcome back to the Option Block. It's been a while. And B, did you know that tune, sir?
Well, I live in the land of pickups, not the land of Ferrari 308s. But, yes, I did, in fact, know that one.
I bet you could find a sweet stash or two down by you, though.
Yeah, I bet you. I've got to tell you, that makes me reminiscent of wanting one of those 308s and the Tesla. I remember I wanted a Testarossa when I was a kid.
Yeah, everyone wanted the Testarossa from Miami Vice.
With the cheese slicer on there. Yeah, that thing was awesome.
That my favorite, of course, the Lamborghini Countach. Probably the best poster car of all time. But I digress as we head on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the Trading Block, the portion of the show we break down what the heck is trading. Yes, this show more than about just 80s show tunes or 80s TV shows, even though that's a fun part as well. Coming into today's show, kicking off our broadcast week here, a little bit of the old downside, the dark side back on the screen. After we seemed like we got a bit of a reprieve on Friday, it seemed like people maybe not as worried about all things pandemic and or stimulus. Coming into today, it seemed like some of those concerns perhaps wavering a little bit again. Most of the major indices in the red. Not exactly a blood red day, but firmly in the red. S&P off not quite 0.5%, about 0.4%. The Nasdaq off about 0.25%. So Nasdaq playing the rare laggard today. Usually it's leading the charge in whatever direction we're going in today. Taking a bit of a break, only off about 0.25%. And the Dow playing the Goldilocks role that the S&P is usually in. So everything's all topsy-turvy today. The Dow off about 0.33%. And coming into showtime, we saw most of the major vol products and indices were almost literally unched from last week's show. And now that it seems like the direction is determined, at least for a little while here, we're starting to see a little bit of that vol actually easing. Kicking off the show, we saw VIX was hovering at 28 this morning, now coming into showtime at about 27.75, which puts it down pretty much a quarter. It's almost unched from where it was this time last show. Our old friend VVIX, a.k.a. the vol of vol, at about a 116 and about a half or so. It puts it down right around 3 points from where it was last year. Remember, it was threatening 120 on our last program. And VXX, a product you guys love to fade all day long, getting a little bit of that fade back on, off about a quarter of a handle. Coming into Showtime was at about 22 1/4. And our newest friend, our newest addition here to the volatility space, a.k.a. VOLQ. Remember, we've been watching this one now on the show here for a couple of weeks. Also kind of feeling that unched to slightly down love. Coming into Showtime, it was exactly unched. It just gave up a little bit of it. It's about a little bit north of 33 now. Puts it down right about a quarter of a point or so from last show, but still pretty much almost in that unched category. It's as if the vol space is just kind of waiting and seeing, which is kind of hard to argue against given everything else that's going on out there. But Mr. Rhodes, you are holding down our Nasdaq volatility hot seat out there today. I know you've been cranking away doing a lot of stuff with Nasdaq of late, doing a lot of research out there on all things VOLQ. So what has been lighting up your tape, and what interesting research nuggets have come across your radar of late, sir?
Well, I've been using VOLQ in a couple of different ways to pick the strikes for INDICES spreads, because we do have the VOLQ futures out there, but the trading has been relatively light so far, which is unfortunate because I think there are great opportunities with respect to VOLQ when we go through earnings season like we are right now, because the Nasdaq volatility is one of the few broad-based index volatility measures that actually does get a little bit of a tailwind when earnings are on the horizon, because there's just a handful of stocks that end up that can actually upset the cart with respect to Nasdaq. So it's unfortunate that the volume's not in a much better place right now, because I'd love to take a look at short and VOLQ and maybe be in long VIX for a week or two here until we get around to election time. And then beyond that, I would love to take a look at preparing for the ultimate volatility crush that's going to come after Biden wins the presidency.
Certainly does seem like the market is pricing in a bit of a crush. If you listen to VolViews last week, listeners, or whenever you listen to it after the fact here on the network, we don't judge. You'll know that a lot of the juice that had been getting priced in through the election and indeed beyond out to January came crashing in over the course of this past week. In fact, even out to January, that was not that distant from the cash in terms of where the vol was pricing in out there. And that had been many points higher out there. Of course, the November contract had been very high, October as well, and even decent. A lot of that came crashing in. So it certainly does seem like the market is pricing in that they are going to at least know an outcome. For a while there, everyone was talking about, contested election and civil unrest, and that's what was being reflected in all these volatility products going out there. It does seem like now at least. By the way, join us on November 3rd. We can all discuss it live on our election night special. That should be fun. But it does seem like the market is pricing in a bit of a known outcome out there, which, again, if you look at history as your precedent and as your guide, that could easily be a little bit premature. That was similar narrative going into the 2016 election. It seemed like Hillary Clinton was kind of a done deal until she wasn't. And then, of course, going into Brexit, as you recall, there was a very now infamous telephone survey that was done of British voters, and it seemed like coming out of that survey, Brexit was a no-go. And market vol got crushed going into that one as well. And look how that played out. So it can be a little bit early to crush the vol on these events out here, but still interesting stuff to watch. Going back to your earlier point, Mr. Rhodes, about the volume out there, I'm kind of curious. I'm looking at the numbers out here. This is still a pretty meaty contract. This is like, your 1,000 multiplier out here, which is, that could be a lot for a lot of your newcomers to the space to really swallow. We have seen an explosion of activity on other products on CME when they started adding the smaller contracts, the micros and the minis. You think that's maybe what the next step is going to be? That's really going to kick the volume into high gear here on VolQ when we start adding perhaps some more bite-sized flavors to this, sir?
I think that would definitely help the situation right now, although VIX, SEBO did that with VIX, and they had like a great week and a half of volume, and the VIX mini futures volume has kind of dried up as well. What I think is really going to get that market going is the same thing that got the VIX market going a little under 20 years ago, and that is the addition of options on VOLQ. I think that's what everybody really wants. It's just you want a more risk-controlled way to play in the volatility space, and you can do that with options and get defined risk. I would be a lot more comfortable trying to play a VOLQ volatility crush using put options or some spreads or something, as opposed to shorting the futures outright, because as we've seen once again over the course of our careers, volatility can go way the heck up, and it can do it very quickly. So I do think that when if I had a financial incentive in the success of VOLQ trading, and I had to choose between a mini future or the options, I would choose the options to really get things going here.
Well, that goes without saying. Obviously, we preach to the options choir here, so we want options sooner rather than later. I know they have said over there at Nasdaq they're probably coming in Q1. So you're going to have to wait a little bit here. You got to put your patient pants on there, listeners. So if you want to play around with the futures, at least keep an eye on them. A lot of you have been asking us for a long time, where can I get some other flavor of vol? I mean, I like S&P, that's fine, but I want to do something else, maybe something that's a little bit more tech-centric, maybe a little bit more volatile than the S&P. We certainly have seen Nasdaq do that. Maybe, as Scott and others on this show have said many times, maybe you're a little bit flummoxed or have a little bit of concern over the weight given to the skew in something like a VIX. Well, maybe you just want to add the money. Just the facts, ma'am. That's what they're going for there in Nasdaq land. So again, check that out. Nasdaq.com/VOLQ. VOLQ is the place to go for all those specs. We can get those numbers cooking. Then we have a lot more data to analyze and crunch here on the show, which will be fun. Speaking of crunching things, Mr. Uncle Mike usually likes to sink his teeth into a nice green day. Today, a little bit more red. But hey, let's see what he can do with that as well. Uncle Mike, sir, what is on your radar today?
Well, you mentioned Green Day. That's more of a 90s band, though, more than 80s. I thought 80s was more of our theme on the show. But nonetheless, Green Day has some cool songs, too. No complaints about that.
It is a Green Day, but hey, we can go with Green Day, the band, too.
That's true. Russell, I haven't seen you in a while.
Yeah.
With you again. I know we've been done a lot of events through the years, and it's been a while. So good to see you. See, with the air quotes up, of course, because we're on Skype. And Sebas, good talking with you again, too. Now that you're a Texas resident, you can barbecue my brisket anytime, my man. So,
all right.
So anyway, with the markets today, it's like we had the good numbers on Friday morning at 9 a.m. and the markets rallied, and I think we got to like 35.15 on the SPX, if I remember correctly, and just haven't been able to get back up there anymore on the S&P 500, I should say, and just haven't been able to continue to do that. So it's kind of like we're right back where we started a week ago. So in other words, the Columbus Day rally, which we had last Monday, markets rallied, and then from there didn't quite follow up with that. It's like we had good news, or we just had like the very, very low volume rally, and we weren't able to follow up on anything with that. So today, in terms of what's lighting up my tape, Apple's relatively flat. My beloved silver is up a couple percentage points on the day, and we're really not getting a ton of vol movement, and in reality, we're really not getting a huge downside in the marketplace. We're down 0.5%, which, based on recent markets, that's really doesn't seem like a whole lot. I think that right now, a lot of what everyone's watching right now is there is kind of like the wait and see approach in the market in general as to who's going to be president. And with that, Russell, I don't know if I agree if Biden's going to be president. I'm not trying to be political on this, but I would have bet dollars to donuts that Hillary Clinton would have won 4 years ago, and I would have definitely was obviously wrong on that. So with that, I think that just at this stage, even if Biden had a 20% lead in the polls, I would still say that elections are unpredictable at this time based on the last election and based upon, what the heck, it's 2020 for crying out loud, too. So no question about if Biden does win, I think that we will have a drop in volatility, but I guess I'm not quite there yet. So we'll see where we're at with things. Not a lot of movement in bonds at this point, but for right now, I think the overall theme of where we're at is things are macro. And we still have a global pandemic, by the way. So there's a lot of talk around the Chicago area about how cases are rising, and we'll see if that comes across to the rest of the country. I don't think we're going to have a second shutdown, but like we talked about last week on the show, it seems at this point, markets don't really seem to care about COVID, for better or for worse. I'm not saying that's not trying to be on one side or the other of that argument, but it just seems like the markets really aren't necessarily enthralled with that right now. And that's what I'm seeing. And then we get to the strategy block today. I actually had a client email me today and call me a bear based on my position. And even worse, he even tried to insult me more and call me a bear fan. Now, Grant, he was joking, but we'll talk about that a little bit more in the strategy block today.
The temerity, calling Uncle Mike a bear. Does he know who he's talking to? Interesting, but I'm with you on the not really buying into the election prognostication. Burn me once, burn me twice, now a third time. Looking back in, we had Bush Kerry, the early exit polls the day of the election were favoring Kerry until they weren't. Heading into 2016, just about every poll you could think of was favoring Hillary Clinton. Look how that turned out. So this far away, I'm with you. You could give Biden a 50-point margin, and I still wouldn't really be buying into it. Until I see returns, until I saw Trump winning Ohio last time, which I do believe, Mr. Rhodes, you kind of told me live on the air last time, I didn't really buy into that. So it's one of those things where until I see the actual numbers, all this other stuff is kind of just noise. And the fact that the market's so firmly buying into it and really crushing the vol so hard, I've always been a little bit reticent on that play. And this one, perhaps a similar air of reticence here. Who's never reticent to crush some vol, though? He's the Texas brisket, Mr. Mark Sebastian. Mr. Meatball, sir, what's lighting up your tape? And are you as surprised as I am that they're coming for this vol as hard as they are with the election still up in the air?
You could make an argument that 27 vol is not coming for the vol, right? This time, we were afraid of the election, and the VIX was what, 16, maybe 15, something like that. I'd love to go back and look. And, because I'm thinking off the top of my head, we might have had a sub-15 VIX heading into election night. So I don't know that VIX is really priced out much. I think it was maybe overpricing itself, but it's still pricing in some pretty decent fireworks. So I think let's kind of settle down and remember that a 27 VIX, while not insanely high since February, any time in the previous 10 years would have been considered astronomical, post 2009, would have been considered astronomically high and a place that we would expect to hang out for a week or two, not for the last 7 months. So I think that, when I see volatility the way it's priced, I think we have a nice flat market. The entire VIX curve is flat, which tells me that I think we're setting up for some binary movement in VIX than we are than anything. And I do think that VIX is heading down. I think, we talked about this on Vol Views. Russell actually pointed this out on Twitter. There were a couple of huge trades that say, hey, maybe a return to normalcy is heading our way, which I think would be good for markets. And, getting back to VOLQ, I think the best thing that could happen for VOLQ and VIX, because let's face it, VIX volume stinks right now, would be those going back to 15 so that they can be used for a hedge. Because right now, both indexes are more, I want to gamble on the direction of volatility at the current levels they're at, not the levels of hey, I need to use this as a hedge. Although I did want to ask Russell this. I've got a working theory. Obviously, we haven't seen anything yet when it comes to VOLQ, that it actually might be a better play for, trading off of triple Q straddles, or if you want to do earnings straddles on the big five and then short a VOLQ future against it. That could be a really interesting way of playing the earnings cycle in the Nasdaq Big Five.
Oh, I think you're absolutely correct. I think the one of the great things about VOLQ is, and some people say that they discount the Nasdaq performance because it's really based on 5 or 6 stocks. But if you're an option trader and you're looking around for dispersion opportunities, generally they're pretty difficult to do with something like the SPX, where you've got to start looking at 40 or 50 individual stocks. You could do something like that into earnings using VOLQ, versus the options that trade on, Amazon, Google, Microsoft, Facebook, and which one did I just forget? Apple. You could definitely do some things around that. And I haven't done it with VOLQ, but I did with VXN, which does use a little bit different calculation. But there was an earnings, there's an earnings cycle to the behavior of VXN. And just due to the way that VOLQ is constructed, using more at-the-money options and using more expirations than the VIX methodology, I have a funny feeling that it'll even be more sensitive relative to earnings. And that goes on the massive list of things to do right there.
I think that is the trade for VOLQ, is that it is, it is a direct trade that you can do versus straddles and in the triple Q. One of the things I always liked about VIX versus SPX is I could hedge off the Vega and really isolate the gamma in an S&P 500 straddle. This is going to do a better job of that in the triple Q. And, to Russell's point, 45% of the triple Q is 5 names. You get to the top 10, you do 10 names in the triple Q, you basically have the whole index. And so, this is something that once we get back to normalized vol levels, and we're not there by any respect, I could see VOLQ being a very good hedge for kind of an earnings season, because, actually, Russell, I don't know this off the top of my head. Maybe this is more of a Matt Amberson question, but how well do the big fives, or, I say big five, I know it's 6, Google, and I call Google and Goog, in other words, Alphabet and the Google track, it's up the conjoined twins. So, you take those 5 names, how strongly do those correlate to each other during earnings season?
I really have never dug into that. I
haven't either. Gotta be something.
They do. They have enough of divergent business models that it's very possible there's not a whole lot of directional correlation among them. I wonder. I really that's definitely something worth getting my current intern on, is pulling up all the earnings numbers,
or even
seeing if there's any consistent pattern to them.
Yeah, I'm wondering if there's if we could do something on straddle performance correlation, even something like that. To that I bet you there's got to be something, right? I'll bet you that there's straddles. The return on straddles correlate somewhat in those names, even though they're divergent business models. I'll bet you that there's something there. That would be fun to. You get your intern working. That's all I'll say.
I will get her on this.
Mr. Rhodes, always getting homework when he comes on the network. He loves it. Let's see what's going on out there in the broad markets. Let's start with the major indices out there. Our old friend VIX, not doing a heck of a lot of paper out there, about 141,000 contracts on the tape as of a few minutes ago. The ADV has been slowly ticking back up, though. A couple of big days over the course of the last couple of weeks has helped that. About 371, so no longer threatening 300K to the dark side. SPY, just a tick over 2 million. As of a few minutes ago, about 2.04 million. The ADV is about 4 million out there. The S, a little bit north of 500,000 right now, about 527. The ADV, about 1.05 million. So we're seeing a similar thread out there. A lot of the major products at half their ADV, or in the case of VIX, much less. The Qs at about 457,000. So the Nasdaq also right around half of its ADV, because its ADV is almost 1.2 million out there. So kind of a light day for tech. But again, Nasdaq is kind of the laggard out there today, so perhaps not surprising. And small caps also kind of having an uncharacteristically quiet day. IWM only about 227,000 contracts on the tape. The ADV is about 571 out there right now. Let's head on out to the single names, see where the action is out here this week. And most of the usual suspects out here today, with a few Actually, no, mostly usual suspects out here. Cost you $1.87 though to break into the top 10 today. That's a pretty active day. That gets us all the way over to our friend Bank of America, number 10. Number 9, Snap. Snap back in the top 10. So I guess you could say they're a little bit of a non-frequent offender out there, 195,000. Number 8, Zoom, been in the top 10 for a while now. Back here at number 8, 197,000. Number 7, actually, this is a newcomer, hasn't been in a while, Hertz. 213,000, followed by number 6, GE. They've been popping in, they've been popping out. They're back in today, 216,000. Another perennial top 10er these days, DraftKings. A lot of action out there of late, 241,000. How interesting will it be when they start to have some sort of options or related trading out there for size on sports products, on sports teams? Just imagine the floodgates that's going to open to the Robinhood people out there right now who are flocking into Apple. Imagine if they can now go out and buy a call on the Chiefs. What a difference that would make out there. Then we'll see DraftKings top of the top 10 probably out there. Number 4, Microsoft, a little bit north of $250,000, about 258,000. Number 3, Tesla. Now we're jumping up into 300K land, 330, but that's still a pretty quiet day. Usually you can count on Tesla for around 500,000 on a day like today so far, and not so much actually getting topped by its Chinese, I don't know if you can really call them rival, but shall we say competitor in the space, NIO, 429,000 contracts for NIO. That means, you guessed it, number 1 with a bullet, the fruit company Apple, just a tick under 800K, 799,000 contracts on the tape. We got a bunch of big earnings popping off this week as well. Got IBM today, we got P&G, Netflix tomorrow, Snap, Philip Morris Wednesday, Abbott Labs, Verizon, Nasdaq. You may have heard of them. Tesla, Chipotle, so a big week popping off here. Coca-Cola on Thursday, AT&T, American Airlines, my old stomping grounds, Intel, a whole bunch more on Thursday, a bunch more. You can check them out for yourselves over there, theoptionsinsider.com. If you got some time later, maybe we'll hit some in around the block. Some of the earnings reports, we got a ton of them. The tickers are coming hot and heavy. Check them out, theoptionsinsider.com. Now we got to keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Everybody, let's kick it off. Let's get weird. Let's get wild. Let's get whimsical. It is time for the odd block. We're going to go back here to a recent offender because they're back on our radar. But before I tell you what's going up today, let's break down what we just talked about on the show not too long ago. This is our old friend Match Group. Remember, they own not just Match.com, but Tinder and OkCupid. Just about the entirety of that online love space. Match Group seems to have it cornered. And we talked about them on the show not too long ago, back on September 28th. At the time, we highlighted what it seemed like some more line in the sand puts for pretty decent size. About 16,000 of these bad boys went up with the OCK 90 puts for 48 cents, right on the bid. At the time, the stock was 109. And fast forward a little bit to today, and you'll see why I'm doing that in a second. The stock at about 114.64 right now, and it never really got anywhere close to that 90 put strike. So looks like those bad boys went out worthless, and our friend pocketing a little bit north of $750,000 out there. I set that up because we're seeing similar paper coming back in today. Dare I say, perhaps our friend is back. This time we're seeing a pretty similar size too, about 14,000, actually 14,099 to be precise, of the October. Still seeing in October. These are going out on the 30th, obviously playing in the weeklies now. Par puts, so he's moving up a little bit, probably reflecting the adjustments in the rally we've seen in the stock since his last trade. He wants to try to get a similar premium level, it seems like, too. Unfortunately, he's not quite getting it. He's getting 35 cents this time, which is pretty much right on the bid again as well. These were 33 cents at 45. So we got 14,099 of the OCK 30th, so expiring end of the month, par puts going up for 35 cents off the bid. When this went up, actually, the stock was 112, so the stock has rallied a bit since then. It's up 114.5. It's a good day today for Match, up about almost $2.50 out there. So this guy's feeling the love yet again out there. I guess the market's feeling the love for online love out there, as Match has been rallying out there of late. So, Mr. Meatball, hey, what are your thoughts on these previous line in the sand puts we just saw in Match? Do you agree that those went out worthless and our friend kept his decent amount of money? And then more relevant to today's paper, what are your thoughts on these line in the sand puts? Do you think it's maybe the same guy coming back for yet another tilt at the windmill, sir?
It sounds like it is. I mean, that makes a lot of sense. I'm guessing that this guy is looking to get into a position here, and that would be the best way to do it, or collect some income. Either way, he clearly believes in the online dating phenomena. And I'll say I've definitely met several people that are single and on Match and Tinder and using them effectively.
Effectively. There you go. That still raises the question in my mind. I get that you can't really go out to bars and the usual places you meet people anymore, so you kind of have to do it through these services. But that still raises the question of what's the utility of that, because you still really can't go out and meet them at the end of the day, unless you can't really set up a date afterwards, because most things are shut down. And maybe, what do you say? You have to get a test first before I meet you in the public? I don't know. Either way, clearly I'm out of touch with these stocks, because these things have been off to the races, regardless of my concerns. I don't know if running out and meeting strangers right now would be my number one priority, but hey, I'm not the one buying up Match.com. So we'll keep these on our radar as well to see. We'll come back to these, see if our friend makes another, not going to make $250,000 this time. He's going to do pretty well on these bad boys if they continue trending the way they are. Now we are going on to, I believe, a newcomer. I do believe this is another REIT to add to our growing category of people liking themselves some REITs. This time, this is Medical Properties Trust. This is a REIT that obviously invests in healthcare facilities. Their ticker symbol MPW. Coming into Showtime today, they're trading just a little bit shy of $18, off about 15 cents or so. A year ago, they were trading $20, so it hasn't been the most rock'em sock'em name. But again, it's a REIT. You don't expect that. And then it seemed like it topped out at about 24 1/4 right before all the madness in February. Then it sold off pretty hard, pretty much down 50%, down to about 12 and change, which is interesting because this is investing in a healthcare one, so that might have a little bit different, return than most of the other REITs, like let's say in shopping malls that just got decimated. Healthcare facilities were in high demand in the height of the pandemic there, and it seems like this name reflected that because it got backed up to like 17.5 pretty quickly, and then it topped out on everyone's favorite day, yes, June 8th, at about 2084 before kind of giving up the ghost, listeners. It hasn't really made it back up there since. And then it sold off recently down about 16 1/4 before it kind of rallied to where it is right now, right around 18 or so, or pretty darn close to it. So that's where we find ourselves right now in good old MPW. What did our Eye of Sauron find today? It found the DS19s going up about 2,200 times for 43 cents. So right off the offer, actually. So you got a chance to work it. This is actually a pretty sizable trade for this name. It doesn't really put up a lot of paper. And the guy got it off the offer. So interesting. And the market wasn't that wide. A dime wide for a name that hardly ever trades. That isn't that crazy. So Mr. Rock Lobster seems, or excuse me, I apologize, Mr. Meatball / Brisket. It seems like someone may think the party is going to continue here in MPW, willing to pick up some upside. Is that your takeaway as well, sir?
It certainly feels like it, doesn't it?
It does. It does feel like that. Are you a big fan of REITs here these days, sir?
I think it depends on the REIT. I would not want to own any commercial real estate, but I think that, you look around at some of the other investment REITs and they can make a lot more sense. Ones that are doing, apartments or multi-units, I think maybe are a little oversold, things like that. But I would be staying away from commercial real estate.
All right, we're kind of coming up against this. I'm going to kind of breeze through this quick one. It hasn't been the most sizable day for other alternate trades outside of that big Match print. So we'll go quickly here through another newcomer to the odd block. This is Will Scott Mobile Mini Holdings Corporation, ticker symbol WSC, trading about $17.10 right now. This is the name that's off about a quarter. Let's see, a year ago was trading about $15.90, hit an apex of almost $20 right before all the madness, and then sold off to about $7.45 during the madness. If you want to know what this name does, I'm not even sure. They're just a crazy name that came across our radar out here. But let's see what our Eye of Sauron found. Another 2,000 lots. So again, not a huge day out there today. Of the Nove 17.5. So slightly out of the money calls. This market was a little bit wider than our last one. Not a dime. It was actually 25 cents wide. It was 75 cents at a buck. That's more what I expect to see in some of these illiquid names out here. These calls went up for 82.5 cents 2,000 times. So looks like has a bit of an overwrite to it. Maybe, tell you what, we'll put this in our to be watched category, and we'll come back to these bad boys, see if there's any interesting activity in Will Scott. Now it's time for us to keep on rolling. It is Monday. It's time to unleash Uncle Mike. It is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody. It's Monday. It is time to unleash the hounds and also Uncle Mike. Uncle Mike, sir, you kind of teased us at the top of the show. One of your clients had the temerity to call you a bear. So what say you, sir, in rebuttal to that highest of insults?
Well, thankfully, this client is also a listener, and I knew he was joking, but it did kind of get my attention when I read that in the morning. So what happened is that on Friday, going into the weekend, I had a long call spread. Just like I've said before, I can't tell you the exact strikes and expirations due to compliance, but I was in a long call spread in my aggressive strategy. And I wanted to trim some deltas going into the weekend, and the long call spread is a couple months out. And so what I did to trim a couple of deltas was I sold a Monday expiration call spread. One very small distance between strikes, and expires today. And I'm still actually in it right now in a short position on it. And so going into it, my deltas were trimmed. I felt very comfortable going into the weekend. And so come Monday morning, I look, and lo and behold, my client was actually right. I was technically a bear because of the fact that I was technically negative deltas on it. And the reason is that there was still time decay left over in that call spread. And the short-term call spread. And so because of that, if the market were to come up a little bit, it would actually would have gone against the overall trade would have gone against me because of the way with which that short-term call spread was being traded. Now, keep in mind, it was such a small distance between strikes that if we'd had a major rally today, it would have become very bullish very quickly based on the gamma that would have existed in the longer-term call spread. But just wanted to kind of throw that out there, is that Uncle Mike technically was negative a very minute amount of deltas for a couple of minutes this morning. So that was actually, it didn't really shock me, but it was still, I never see red when I look in my delta column ever. But this is one of those situations to where it just kind of happens. And I was more doing it for a time decay and just trying to trim some of the deltas with which I had originally in the longer term call spread. And thankfully I did, obviously, based on the market performance as to what's happening today. And then as for me being a bear fan, I actually grew up a bear fan, and I could actually still name probably the entire starting lineup of the 85 Bears. That's how much of a bear fan I used to be. But when they said that they didn't think that I was worthy of a local guy tryout, when they typically give any local guy with any chance of playing in the NFL a tryout, and I actually was a legitimate prospect who ended up signing an NFL contract, I've decided I'm now a fan of two teams for the rest of my life, the Bills and whoever plays the Bears. So that is the strategy block for today.
Look at you throwing a little bit of a dig in there at the hometown team after they come off a pretty impressive victory this weekend there as well. I understand, though, your personal animosity towards them. So there you go, listeners. Sky is not falling. Uncle Mike has not turned into the darkest of bears out there, but he had some short deltas on for ever so briefly there. This one. That's why the sky got dark and the rivers turned blood red ever so briefly, but he took them off. And the world is back to normal. Let's see if you can turn it topsy-turvy again with a little bit of your real quick mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody. It's that time of the week. Time for you guys to take the reins. Some of your questions. This first one's kind of actually an interesting perspective. You don't get it too often. We hear a lot of people talking about all the flow coming in from places like Robinhood and others out there, usually in the positive of light. Taglines here with a Z is positing an alternative viewpoint. Taglines wants to know, do you think the new brokers like Robinhood and Webull are helping or hurting the options market by driving more beginners into options trading without much guidance or education? Well, that is an interesting tack to tank, because obviously the first people think is, all this volume. This is accreting into the space, and this is a great thing for options. And certainly, overall, the industry has benefited from it. The numbers out there are just astronomical. Pick a month here in 2020. Obviously, there's other things afoot aside from Robinhood and these names, but still, they are certainly a factor driving this volume out there. 80% of that volume is flocking into a handful of positions and a handful of names. We had Matt on the show last week saying he had never really seen the call skew as big in Apple as it has been in this post-Robinhood era. But it is an interesting point. They're not really doing a lot of hand-holding with these people, as we saw tragically on our options bootcamp and advisors option program in the last couple of months with, of course, the tragic story of the Robinhood customer who didn't really understand the process around early assignment for a short put spread and ended up tragically taking his own life. So Robinhood has obviously pledged to improve things, but still, it is an interesting question. Mr. Rhodes, as our guest here today, I'll give you pride of place on this one. What are your thoughts as Taglines wants to know? You think these new brokers are helping or hurting by shoving beginners into options without a lot of real assistance along the way?
I'm a big fan of personal responsibility. So I don't, I have a very difficult time with feeling a lot of sympathy for people who are adults who make decisions without, first preparing themselves to make decisions that they could end up losing money with. And so I don't fault the brokers as much as I do people who rush into trading without laying the groundwork that they should properly, or putting in the amount of proper time they should to understand what they're getting themselves into. So I'm going to side on the libertarian side of things and say that this is not the broker's fault at all. But unless the brokers are doing something that is just outright negligent, and we have regulatory bodies to keep an eye on them as far as that goes.
Mr. Rhodes playing the rock lobster, dyed-in-the-wool libertarian role here on the show today, saying, darn all of you out there, you're going to trade. It's in your own hand. I guess, these are technically adults. You have to be 18 usually to have a brokerage account. Some of them may be adults in the literal sense, if not in the truly figurative sense out there. But still, interesting stuff out there. I don't know, Mr. Meatball, any thoughts here on Taglines? Do you agree with Mr. Rhodes, or do you think maybe some of these brokers should be doing a little bit more to ease the entry point for some of these people into options?
Well, I think that it's good that people are trading options. I think for people that don't have as much money, it's a way for them to express their opinion. Yes, there are some risks associated there. You should have to have basic understanding of options in order to trade on them. But for the nice thing is most of these brokers won't let you do anything other than buy unless you can prove it at this point. And frankly, this is why the project that I've been working on for the last 3 months exists, is because it gives opportunity for people like me and Russell and people that actually know what they're doing to develop stuff that can really help people make a lot of money. I've been working on a little project we call Project Little John that helps me basically see what's going on in Robinhood and develop trades to take advantage of what I'm seeing. And so this is a absolute boon for people that know what they're doing in the business. If Citadel was a public company, it would be a screaming buy with how much money they're buying from, with how much money they're making off of Robinhood. Citadel currently owns 65% of all Robinhood paper flow, and they have paid over $100 million in the first 2 quarters. And the reason why is that paper is really valuable, and if you know what to do with it, you can make a lot of money on it. And that's kind of where I land with what I'm seeing. And so, yeah, I think it's great. Everybody jump in Robinhood and, hop on your phone and trade, because I'm waiting.
Never one to be shy to talk up his book there, Mr. Meatball. But you do have a point out there. And Citadel, you're right. They're willing to pay that money for a reason. They're nothing if not Darwinian at the end of the day. If it didn't have value to them, they wouldn't be paying that. Mr. Uncle Mike, sir, I can usually turn to you for some sort of sage, middle-of-the-road, calming influence out there. What do you have to say here for what Taglines wants to know about folks flocking into these new brokers, sir?
Well, if the broker doesn't provide execution or customer service, let's say that my trade's not going through and I have no one to call, and they say that they're going to, well, shame on them. Then they really should be, then that's wrong. If the broker doesn't provide hand-holding, well, that's what part of being a discount broker is all about. I remember when I was at Options Express and the director of education, and this would have been, roughly 10, 12 years ago, all of a sudden I'm being told by our company legal counsel that I'm being flown to New York and I have to testify on Wall Street in the offices of FINRA. And I'm like, whoa, what on earth did I do? I was the director of education, and so I pretty much was one of the faces of the company in that if you went to an Options Express event back in the old days, I was likely there. And so eventually, what I had to do was I had to answer all these nasty questions, and it was really one of the most miserable experiences of my life, quite frankly, in that where the stakes were very high, it was horrible, awful, and bad. And it turns out the whole reason this happened, and I heard from reliable sources later, this is what happened. There was a very wealthy celebrity that went to an education company that it was one of the get-rich-quick education companies that's bankrupt right now, but that education company then used Options Express as their broker, and so, or what they recommended to it. So this rich celebrity lost a lot of money, and so he sued the education company, he sued Options Express, and so eventually nothing happened. I didn't get any dark marks on my record, but still, I remember thinking of the lengths with which I went to educate people. And if he would have listened to any of my webinars on risk management, he may have lost some money, but he wouldn't have blown out the way with which he did. And so from that standpoint, do I think it's the broker's fault? No, I really don't, because if you're an adult and you're doing this, you need to kind of have an understanding of what you're doing. Do I think it's McDonald's fault if somebody is fat and they eat there every day? No, not at all. Do I think it's the alcohol company's fault that some guy gets drunk? No, it's not their fault. They never put a gun to their head and said, go out and drink or go out and eat all these quarter pounders. So from that standpoint, I think also, with all the free education that's available right now, you can get a lot of basic free education no matter what. And if you want to become a little bit more educated, then call up Mark Sebastian. He'll help you out with that. So everything that's available out there, if you have enough savvy to figure out how to trade an option, then you should have enough savvy to find some type of education on it. And that's my 2 cents.
Interesting. Not a lot of love for the unwashed masses out there. Hoist yourself on your own petard as we head on into our final segment. It's time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, time to go around the block. I teased at the top of the show, but there are a lot of big names popping off throughout the rest of this week. Just after the bell, we got IBM. They were at 125, almost 126 as of the time of our report here. They were pricing in about $4.74. In the past, they've moved about $6.40. So a little bit light from a vol perspective, but again, hard to argue that position given everything that's gone on over the past couple of earnings cycles. Some other big heavy hitters popping off this week you may have heard of. Netflix popping off on the 20th after the bell. They were at $530.79. They were pricing in about $45.61 in the past. They've moved about 27.5. So a little bit of extra juice out there in Netflix land these days. Then we've got Snap. Just talked about them at the top of the show as well. They're popping off on the 20th after the bell. They were at $27.83. In the past, let's see, they're pricing in $3.29. In the past, they've moved almost $5, $4.90. So a little bit light on the old earnings front. Of course, a big mover and shaker out there these days, Tesla. They are popping off on the 21st. They're at almost 440 as of this report, about 439 and change. They were pricing in 3606 in the past. They've moved, get this, listeners, 3664. That's the most in line, I think, we've ever seen a Tesla straddle. And again, kind of hard to argue with that over the last couple of sessions out there. So interesting stuff, a lot popping off. I could keep going for hours here. How many tickers? You can find them for yourselves. TheOptionsInsider.com is the place to go. Click on that Options News and Articles tab, top right corner of the homepage to begin your journey there. All right, let's go back around the horn. Let's do a combo because we are kind of running up against it here. Let's start with our person holding down the Nasdaq hot seat. A, Mr. Rhodes, what are you watching for the rest of this week, sir? And then B, if folks want to find more of your analysis of all things VOLQ, where should they go? What should they do?
Well, for the rest of the week, if it comes to fruition, we're going to have one more debate. So I'm definitely keeping an eye on that because I do think this may be one of the last chances for the tide to really turn with respect to the election. I just don't know how much you're going to get out of earnings season this time around. It's very, very difficult to give forward-looking statements when you don't know if we're going to have a second round of lockdowns. And the same thing, you also don't necessarily know who's going to be the president next time around. So, in 2021, you don't know what the tax policy is going to be. You don't know what the trade policy is going to be. So, I think even though we're getting into earnings season, this might be kind of a dead one.
Yeah, that's true. There are some other external factors at work here. And, of course, the last couple of seasons, I think you could charitably describe them as dead as well. We expected a lot of vol, a lot of Sturm und Drang, and got a whole heck of a lot of nothing, a lot of whimper. So maybe this season we'll play ball, or maybe because it's 2020, maybe it'll just confound everyone and just blow the doors up. Only one place to find out, theoptionsinsider.com. Check on those earnings you move, and we'll have the results reports as soon as they're available as well. So you can play the whole thing, check out the whole season as well. And, of course, you want to learn more about all the things Mr. Rhodes is talking about when it comes to VOLQ. You know where to go. Nasdaq.com/VOLQ, VOLQ is the place to go to learn more. Kick the tires and light the fire. Start trading up those futures out there so we can parse it more on future shows. And Mr. Uncle Mike, when you're not testifying against celebrity day traders, if folks want to hit you up, maybe they want to turn you to the dark side with some short deltas of their own, where should they go? What should they do?
Oh my gosh, don't say short deltas. Go to stcharleswealth.com to find my contact information. I'll be more than happy to work with anyone that's looking for a financial advisor who is not afraid of doing some short deltas to protect the long deltas. And in terms of my outlook on things, hey, let's just watch the debates and see what happens.
There you go. How unusually level-headed of you. So hopefully this debate will be a little bit more level-headed than that first one. That was, I think to call that a debate is charitable and perhaps not earned. That was just a series of madness out there. Hopefully we get a little bit more people staying on topic and maybe answering questions this time. That, God forbid, that would happen on a debate. That would be kind of interesting. All right, and last but not least, he's known to sometimes answer a question or two, usually not. He is the greasiest of meatballs. Mr. Meatball, sir, what are you watching for the rest of this week until Thursday, A? And then B, if folks want to check out your Little John and all the other stuff you have cooking, where should they go? What should they do?
Yeah, go to optionpit.com and check us out. I am excited about, everything that I'm seeing in front of us right now. We got a nice down day. Go to optionpit.com and follow me on Twitter. I'm going to be doing a presentation Wednesday night on the project that I've been working on, codename Little John.
Codename Little John. Look for the additions coming soon. Friar Tuck, Maid Marian, the Sheriff of Nottingham. Many different ways for him to go, but it all kicks off with Little John. Check it out for yourselves. Optionpit.com. And, of course, listeners, that music means we have exceeded our allotted time here on the Option Blog. It was a fun one, though. A lot of fun stuff to chat about today. If you're listening live, you're saying to yourself, hey, I need a little bit more in my ear holes. Well, then stay tuned. We'll be back pretty much right after the show to break down all the vol and the skew and the open interest and all the other cool stuff going on in the world of crypto options. And, of course, stay tuned throughout the rest of the week. We got Interview Tuesday tomorrow. We got a good one lined up for that. We got Education Wednesday with Boot Camp and OPR coming up. Thursday, of course, yet another episode of the Option Block.
the Option Block is brought to you by Nasdaq. From its inception, Nasdaq has been an innovator and agent of change in the financial markets. It's in our DNA, from the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges. We exemplify customer focus, consistent technology, and streamlined solutions. Now Nasdaq is proud to launch the Nasdaq 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VOLQ uses only at-the-money options to provide a precise measure of Nasdaq 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. Nasdaq, leading the U.S. options market and continually rewriting tomorrow. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available on the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.